Coming into the day, the market was a trend from the open bull trend that, for the most part, trended up in a somewhat broad channel. It was still a small pullback bull trend. Typically, when you have a small pullback trend or a trend from the open, not a small pullback trend, the market goes sideways for some period of time. And you can see the market went sideways here, so it met that minimum. Daily chart, gapped up 4 consecutive bull bars here, 2 here, so 6 consecutive bull bars, testing the high close, probably, trying to get to 4,000. The bulls ultimately want to get up to here. The bears hope that they can form a double top and get lower, but as I've said, this is enough buying pressure. We're probably going to have to go sideways to up and form a trading range here. First bar, bull bar closing on its high. It's a reasonable stop entry buy, betting that it's always in long. Other traders will wait for 2 or 3 consecutive bull bars. Probably always in long, going a little bit higher. Pause. It's a micro channel, may get a deep pullback, and you can see traders disappointed trying to get out break even. It's still possible that we fall below this low, but this is strong enough buying that probably going to go sideways and be a bull trend or a trading range day and not be a bear trend day. Surprise bear bar may have at least a second leg down. It's possible we get down to here. Probably buyers somewhere around the moving average. High one buy, but after this bar, probably another sideways and second leg down. Bulls that bought disappointed here, got out break even. Some bears will sell below here, taking a low probability bet that we get a second leg, but again, not ideal. Probably we'll get a double bottom, which we got here. Bulls, double bottom, okay buy. Probably we'll get a second leg up. 3 consecutive bull bars. Bad follow through. The bears want some sort of second leg trap. However, this is enough buying pressure here. Probably going to get a second leg up and probably will test this close. Strong breakout. These 2 bars breaking above this bull flag, may get a measured move from the low of this bar to the high of this bar, projecting up. Here, bulls also want a measured move from here and a measured move from maybe the open of this bar or the close of this bar right there. I want to see if we actually, before I move on, if we got to the 4th one. I think we did. So we got that measured move, then the next target would be here, which the bulls got right at the end of the day. So the bulls got a measured move from the open to this close. The reason I chose this bar is, for one, it's a closer target, and number 2, it's, let me get rid of this. It's a closer target, and I think this is where the market became always in long. It might have been here. However, 3 consecutive bull bars, probably always in long. The one problem the bulls had was tail in this bar, tail in this bar. Big bar closing near its high, sign of strength. So 3 pushes up, 1, 2, and then 3. So it's a wedge top on a, it is a wedge top on a smaller time frame. So consecutive bull bars, disappointment, but again, possible wedge, 1, 2, 3. Strong enough buying though that the market will probably this is probably a minor reversal even if we go below this bar. Just need to see one thing real quick. Second entry short, you can call it a nested or consecutive tops. We had a low 1, low 2, breakout low 1, low 2. Most traders, reasonable to get out of shorts, get out of longs below this bar and look to buy a pullback. It's possible wedge 1, 2, 3, maybe another wedge 1, 2, 3. probably going to test the moving average. So you also had a high one buy here. Most traders we got below this bar, maybe above this bar, and wait for a pullback. Testing the moving average here. Several consecutive bear bars, but it's a wedge bottom on a smaller time frame chart. There's the first push, pause, second push, pause, third. Bulls probably will buy, stop down here, maybe down here, betting that the market keeps channeling up. One thing we know for certain is the market's going to have at least 3 closes below the moving average. So although we touched it here, it's not enough, but it may be enough for the market to go up. But if it does go up, I still think we're going to get 3 closes below the moving average. Hesitation, more bear bars. Again, I think traders want to buy at the moving average. And while this is above the moving average and it's a strong trend, it still doesn't look that strong. Big move up, big pullback, big move up, big pullback. And most traders want to buy, most traders don't want to keep buying when they see this. They want to buy pullbacks. Possible gap here. And the bulls they're hoping this is a small pullback trend day. And right now the channels are tight. Tight channel up, deep pullback, tight channel. So the bulls want the market to keep continuing up. Wedge top, bad sell signal. I don't want to sell right above the moving average either. And breaking out to the upside, bad follow through. So eventually, again, what do bulls do? They can probably get out below this bar, but it's also a micro channel. So the market may continue to go a little bit higher, but it's hard to stay long with this kind of price action. 3, 4 consecutive bear bars. May have a second leg down. Finally went under the moving average. But again, we rallied up to a new high here. Eventually, one of these highs is going to lead to a lower high, and we'll get a second leg down, which we got there. Now the bulls have a micro double bottom, but doji, tight trading range here. Not great price action for stop entries. And didn't trigger, broke to the downside. Bull bar, bear bar. So this is the minimum. 3 consecutive bull bars below the moving average. We knew that was going to happen today. Now we have a low one short. You can call it a wedge. 1, 2, 3. Doesn't really matter. It's a possible gap here. Bulls are going to look to buy down here. The bulls were able to keep the market above the moving average for several hours, half the day. And I want to see one thing. Anyways, this is pretty much half the day, so it's common. The bears want a midday reversal, test back down to the bottom of the channel. The bulls want continued trend. So we had a trend from the open, spike in channel. The bulls want some form of a double bottom and the market to rally. We could have a double bottom even with here and the market rally. Outside up bar, surprise, 3 pushes down. Probably going a little bit, probably getting a couple legs up. Follow through, good for the bulls. Breaking above this small flag, so making a measured move of these bodies right here. 3 consecutive bull bars. Probably buy the close and at least a little bit higher for a second leg. Doji, so sign of weakness, a reminder that the market may not go much higher. But again, if trader could buy, maybe they put their stop a little bit below this bar, they could trail it all the way up. When they get a big bar like this, a lot of traders are going to take profits. If they bought this close, they would see this as a gift. I want to see, that didn't work, but you got a measured move almost of the open of this bar to the close of this bar. Still, this is a pretty strong micro channel. Most traders would just start taking profits. Once you get this many consecutive bull bars, it's strong. You're probably going to get a second leg up, but you may get a deep pullback, kind of like this. High one buy and bear bar. And you can see the pullback was rather deep. Now we have a high one following this. It's possible we get a second leg up, but again, with all this trading range price action, bears made money selling this high. As strong as this was, this is a lot of trading range price action. And as I said a second ago, bears made money selling up here. So I don't think this is a great high one buy. You might have sellers, and the risk is pretty big for it. Stop down here. I think there might be more sellers before the market goes and measure move up with this bar than buyers, and it didn't trigger. Second entry buy, but again, micro channel. It's an okay buy if you want to take a chance that we get a second leg up. But again, I don't think it's all that great. If I was short, I would get out of long. I'd get out of shorts above that bar, but I don't know how interested I'd be in buying. But the market is always in long. It's a bull trend. We're getting higher lows. You can take the chance that we rally late in the day. And you can see new high of the day, even stronger breakout. And as I said a minute ago, measure move target, open, close, up to here. Probably some other measure move target, maybe, yeah, close enough from this double bottom to this high. Maybe even a measure move from this bear flag or bull breakout of this bull flag. So probably, again, I forgot to mention, but might be by the close here, maybe here. But once you see this strong bull bar, that's profit taking, best looking bull bar, and you can kind of tell the body's average, and then the body pops. So it's a sign of a bigger body. This body's is probably twice the size of this. It's bigger than this. It's the best looking bull body, arguably, since probably over here. So that's another sign of exhaustion. If I take the size of this bar and just measure it, and you could pretty much eyeball it, but you just compare it to other bars. It's about the size of this bar. It's smaller than those two bars, but it's a big bar late trend. So, 60% chance or 50% chance you get a small second leg up, but this could be the end of the move. Outside down, a lot of traders would get out below this bar late in the day. 14.25 may sell off into the close. Two big bear bars, probably going to get a second leg down. Outside down, bigger bear bar, and that put a tail on the end of the day. So overall, it was a trend from the open day, and as weak as this looked over here, sometimes it helps just to pay attention to the moving average, and you just pay attention to the moving average and look how the bears can't get below it. They cannot get below it, can't get below it, and eventually you're 24 bars above the moving average, probably going to go sideways, even if we go below the moving average. But overall, on a day like today, it's important to not be too eager to want to sell. Always in long, and that's where always in can be really helpful, because it can help keep you in the right direction. And I've said it a couple times, when the market is clearly one-sided, when the market's clearly always in long, what that means is there's no minor reversals to reverse the market. A trading range has, by definition, is the reason you scalp is it's a minor move up, minor move down. This is a trading range right here. Minor move down, minor move up. Now the overall range is a trend. Bull breakout. This is stronger than this, so it's always in long. So if you're buying, you're at least buying in what could be a trend or a trading range. If you're selling, it still could easily be a bull trend or a trading range, so it's not as ideal. But always in can help, because it can kind of be a radar. Is the market always in long or always in short? It's always in long. Therefore, I only want to buy. Is the market always in long or always in short? Well, it might have been always in short here, but typically a good rule of thumb is wait for consecutive bull bars, especially after this big tail. Couldn't get consecutive bull bars, probably a leg in the trading range. Therefore, I want to look to buy in the bottom of the range, and this is a minor reversal. So probably back to always in long above this bar. Not always in short, not enough. Still above the moving average. Still always in long. Not enough here, not enough here. Clearly always in long. again, always in long, and then, maybe always in short, but again, above the moving average, too late in the day to sell. So if you really think about it, the market never went always in the short for the entire day. And if it's in a trend and it might be channeling up and it's not clearly always in short, it's usually best to not sell, because bulls are taking profits at new highs, bears are selling, betting on retracements, 50% pullback, sell-offs of the prior leg. So it's not ideal. And often what happens is, in a broader trend, you'll have a vacuum test of support, 50% pullback, where the bar looks like it's always in short, but it's basically a sell vacuum. So traders step aside, they want to buy 50%. Traders step aside and they start buying once it reaches that price level. Bear bar, but again, it's probably a sell vacuum test of some sort of support level. Maybe the high of this bar, which was a credible stop entry, which you can see it tested it, then went below it here, turned up. Hope this video helps, and comment if you have any questions. Thanks.